Welcome back, everybody, to Altcoin Daily. My name is Aaron. This is a big video today. We have a lot to talk about. Bitcoin below $30,000. The end is near, my friends. If you hold Bitcoin, if you hold Ethereum, if you hold cryptocurrency, make sure that you watch the entire video, because it has come to my attention that cryptocurrency investors are being fooled. You are being tricked. You are being deceived if you're in cryptocurrency, and things are going on behind the scenes that most people cannot even fathom. So if you appreciate us breaking this story to you, give the video a like, and I'm going to clue you in as to what's actually going on in the world. You're going to thank me. I hope this video provides you with value. So this is what the world is seeing. This is what's happening. The European Union wants to ban anonymous cryptocurrency wallets by 2024. Some people are even saying they want to ban Bitcoin wallets. The European Commission has formally announced a broad crackdown on the cryptocurrency industry. A prime target will be anonymous cryptocurrency wallets. Let's find out the details, and we'll talk about what this means to you, to me, to us. The European Commission, the EC, which is executive branch of the European Union, confirmed a new proposal today calling for stricter regulations of anonymous cryptocurrency wallets and transactions. Earlier in July, leaked reports suggested that the Commission would be moving forward with a harsher crackdown, and today's announcement confirms it. Per the document, the Commission has proposed to oblige companies that facilitate transfers of Bitcoin and other cryptos to collect various personal data of senders and recipients. In theory, this should help law enforcement agencies combat money laundering. They're doing this in the guise of fighting money laundering, but they're going after crypto. Direct quote from the Commission, they say today's amendments will ensure full traceability of crypto asset transfers like Bitcoin, which will allow for prevention and detection of their possible use for money laundering or terrorism financing. In addition, anonymous crypto asset wallets will be prohibited, fully applying EU's AML KYC rules to the cryptocurrency sector. I don't know if you've been on Twitter recently, but people are going crazy talking about how the EU is banning Bitcoin. And once again, you are being fooled, my friends, to be scared of Bitcoin, to be scared of crypto when the prices are the lowest they've been in such a long time. Let me tell you what's really going on. The two big takeaways that everybody is spouting on Twitter are, number one, that anonymous cryptocurrency wallets are banned, and number two, Bitcoin wallets or transactions might even be banned. The reason I think this is because the Commission themselves are tweeting out cryptocurrency is one of the newest ways to launder money. Our rules will now apply to the whole of the cryptocurrency sector. We will ban anonymous crypto wallets and make sure that crypto asset transfers are traceable. Now, let me tell you what's really going on. For anybody who needs to hear it, the EU is not banning Bitcoin wallets. They're trying to introduce a cut-down version of the Financial Action Task Force travel rule, which we've been aware of for 2+ years now. Short of it, just record recipients' names on transactions $1,000 or more. This isn't great, but this is nowhere near the level of FUD that we're seeing talked about on Twitter or being reported in the news. But wait a second, Danny. She literally says we will ban anonymous cryptocurrency wallets. We just read that right from her. It's just words, no details. As far as I'm aware, it's introducing the Financial Action Task Force travel rule, as I mentioned above. If you can find any actual detail on what she says anywhere, please link and I'll take a look. But these guys just talk in headlines for clickbait. They're literally trying to scare you, because when you look at the actual information in the proposal, they're not doing what they're saying they're doing. So you are being deceived when it comes to Bitcoin and crypto's value prop. The end is near, my friends. And when I say the end is near, I'm talking about this downtrend that we've been in for the last 3+ months, with Bitcoin the lowest it's been in like 6 months. The end of this downtrend is near. Let's take a look at what's happening on chain. Whales have been accumulating aggressively ever since the China sell-off, ever since May. Whales have been in heavy accumulation. As more time passes, more data comes in, the more we see this is what's happening. To go even further, because more and more data comes in every day, the illiquid supply chain for Bitcoin is firmly showing that investors are accumulating. Yes, there was this initial sell-off. That's true. But what we've been seeing starting a few months ago is Bitcoin being put in illiquid supply wallets that don't have a history of selling that much Bitcoin, and we're seeing a return to accumulation. So plenty of different on-chain metrics are showing us that smart money is buying while retail remains scared. I wonder why. To go even further, there's so much building that's been going on in the space for the last 4 years. There's so much money flowing into the space. I share things with you like this every single day. This is a success story. This is awesome. Cryptocurrency exchange FTX raised $900 million and are now valued at $18 billion. FTX founder and CEO Sam Bankman-Fried says that the $900 million fundraise will largely go to mergers and acquisitions. So Sam Bankman-Fried is only in his mid-20s, I believe, maybe upper 20s. He started with nothing, and now his personal net worth, because he's been building products that people use, his personal net worth is like 20-some billion now, and his company is valued at $18 billion. This man genuinely effing lived it. He deserves it all. This is him just like 4, 5, 6 years ago, before he was a billionaire, probably before he was a millionaire, working late nights, building. This is how it started, and this is how it's going, and this speaks to the state of the cryptocurrency industry today. There's so much building and money coming in and awareness. There's so many different products. My friends, do not be fooled. Check out some of this stuff. Grayscale launches a DeFi fund for institutions. Grayscale is launching a new fund focusing on the emerging decentralized finance sector. They're just now getting in. We've been on this for months and months, if not years. The asset management giant Grayscale is doubling down on DeFi. As of July 1st, the index tracks 10 so-called DeFi blue chips: Uniswap, Aave, Compound, Curve, MakerDAO, SushiSwap, Synthetics, Yearn Finance, UMA Protocol, and Bancor. The index was most heavily weighted to Uniswap, which has a almost 50% allocation. So, institutions can now be exposed to a DeFi index at Grayscale. Tell me more about this. Who? Why? What's involved? Why DeFi? Grayscale CEO Michael Sonnenshein on CNBC talking about the DeFi fund.
You're attempting, it says here, if you can explain it to us, to create an institutional grade digital currency index. What's in it, and who would buy it, and how does it exactly work? Who's the partnership? What does it involve, Michael? Just update us.
Sure. Well, this is Grayscale's 15th investment product. And I think for us, we're always trying to broaden access to the digital asset market for investors. And certainly there is interest from a broad base of Grayscale's existing and prospective investors in DeFi. DeFi is really traditional financial services meeting decentralization. And so working with the CoinDesk team, have been able to develop a really robust institutional grade index and now give investors the ability to invest in DeFi protocols through a singular investment vehicle that gives them broad-based exposure across DeFi assets like Uniswap, Aave, and others.
SushiSwap. Got to have some SushiSwap in there.
In other news, Mastercard partners with Circle to settle USDC payments. Circle's USDC stablecoin will act as a bridge between crypto assets and fiat money. Mastercard has announced partnerships with Circle, Paxos, and Evolve Bank and Trust to facilitate simpler conversions between cryptocurrencies and traditional fiat money. First, we saw it with Visa. Then we see it with Mastercard. The big financial players are getting in because they have to, or else they will fall behind pretty soon. Everybody is just naturally going to have a cryptocurrency wallet. My friends, I just made one of the largest purchases of Bitcoin for me personally that I've made in months because of this dip. And, seeing prices get inflated away, I mean, it reminds me why we need Bitcoin. Year after year, you don't notice that much, but decade after decade, you notice that, items are getting smaller and prices are getting larger. We need a hard money like Bitcoin. This is a pretty interesting chart. Crypto fees. There are tons of cryptocurrency projects. Which ones are people actually paying to use? See, the reason I find this interesting is because I remember back in, I think it was like 2018, the Bitcoiners were touting that Bitcoin reached a certain threshold, a certain milestone of crypto fees paid on the whole entire network. And I remember around 2018 when Bcash was still a big thing. I think it was Roger Ver making fun of Bitcoiners for touting the fees on the network. And Bitcoiners said, no, fees are good. There's a demand to use the block space. There's only so much block space. This is good. And for a while, Bitcoin had the most fees out of any of them. And then earlier this year, we saw Ethereum, start having more fees than Bitcoin. Then we saw Uniswap start having more fees than Bitcoin. Now we see this with Binance Smart Chain, Aave, Compound. The point is, we can tell the protocols that are actually getting used by people paying fees. There's a demand to use these protocols. What an interesting time to be in the space. This is a big story. MakerDAO moves to full decentralization, Maker Foundation to close in months. This is what we like to see. The original decentralized finance protocol started out decentralized, and to decentralization it will return. The Maker Foundation has announced it has turned over operations entirely to its decentralized autonomous organization DAO, MakerDAO, as founder Rune has long promised. The foundation will formally dissolve within the next few months, he wrote in a blog shared in advance. MakerDAO has been wildly influential within crypto, especially in the Ethereum community. It has more often than not had the most assets locked in its smart contracts of any other DeFi protocol. Its founders pioneered the DAO structure early on, only to formalize into a traditional organization structure in 2018, which caused internal tension and division. MakerDAO is best known as the creator of the DAI stablecoin, but DAI is enabled by a lending system that has allowed many crypto holders to make use of their assets without selling them. Guys, TLDR, MakerDAO is moving more towards decentralization. They don't have to do this. They're doing this in the spirit of the whole ecosystem, and this is what we like to see. Finally, my friends, the Ethereum virtual machine is now compatible with Solana via Neon Labs. TLDR, Neon Labs will deploy an Ethereum virtual machine solution that will allow any Ethereum protocol to work on the Solana testnet. We don't talk about the Ethereum virtual machine enough, but this is something that's on Binance Smart Chain. A lot of quote-unquote ETH competitors adopt the Ethereum virtual machine because Ethereum is so vast in this whole space. It's has so much going for it. Its ecosystem is so big that they need to be compatible with the Ethereum virtual machine. And this makes Ethereum stronger. This makes Solana and Binance Smart Chain stronger. This interoperability is great for the whole ecosystem. At the time of recording, Bitcoin is still below $30,000. Ethereum is below $1,800. It's your move, my friends. Are you in this for the long run or not? What are you buying? Are you buying? What's your plan? Let me know in the comments below. I still maintain that this is going to be a great year.